I know the price of success. Dedication, hard work, and an unremitting devotion to the things you want to see happen. Lloyd Wright. Let's jump into these charts, my friends, as we end the week today on Friday. At the close, we see the S&P 500, NASDAQ 100, 20-year U.S. government bonds up, gold and Bitcoin down. Let's jump into these charts and see where we are and how the week ended up. Of course, we have been long on stocks for quite a while. Stocks, of course, hit their interim low back in April when there was all that talk about crazy trade tariffs. Then we had two sort of holding weeks, and then things shot off. And man, do they just keep climbing. At some point, it will stop. Some catalyst will happen in the market. You will see things peak and then rotate over. What goes up must and always comes down. When will that happen? I don't know. We're in the summertime trading zone. As we get into the fall-winter trading zone, I'm guessing that we will see things charge along in perhaps another way. Maybe that's when things will peak. Those who've studied the trading zones, you know the summertime trading zone is typically, it's hot. A lot of people are on vacation, not a lot of volume in the market. And then all of a sudden, when the fall-winter trading zone hits, we have much more, again, sort of clean moves one direction or the other. But look at what we've had all summer starting in April. Just hammering up. I mean, this is a weird world. So many things are different. I know we have the quant trading. We have all the AI that's engaged in the market, but you know what happens again and again when you have all sorts of systems that are set up? When there's an endemic market crash, when there's an exogenous event, when things do go south, who knows what will happen? So we'll be ready, we'll be waiting, we'll be watching, keeping the powder dry. But in the meantime, we see things go up. Our directional probability fallen off just a little bit today, even though the S&P went up. Backtest accuracy slid off a little bit, but we are still long the S&P 500 as we end the week and go into the new week. You can see we hit average volume, just right a little below. That was on the weekly chart, a little below average volume on the 2-day. And things did pull off on volume on Friday on the half day, but did click higher. So that is nice. The high for the week was, let's see, 637.58. The high last week, 629.47. So again, a decent week up, decently for a $637 ETF. Moving up just fine for us. Now let's look at where we are on the NASDAQ. And again, NASDAQ, the numbers actually clicked up a little bit on the directional probability, backtest accuracy. Let's see, it moved up a little bit too. And the NASDAQ was up just 0.24%, but again, reaching a high for the week. Not quite average volume on both the weekly and the 2-day. And of course, the half day, it did fall off on Friday too. It is summertime, but again, we've moved higher during the week. The high we see is 567.70. The high last week, 564.73. So again, we continue to be long. We continue to look for up movement. For those of you who are Patreon members, of course, please check out at the Patreon page or your email. Remember, we always load everything up, both the Patreon page and your email. If for some reason you don't see the 5-day plus ETF trading analysis and execution plan in your email, then of course check the Patreon page, which you have access to. We do lay out the analysis on all 5 of the ETFs that we follow. That's the S&P 500, NASDAQ 100, 20-year bonds, gold, and Bitcoin. And we provide you there the price direction prediction, the best trade entry point, the strategic profit exit point, the expected price move in US dollars, backtest results, and the reason why, the key patterns that we're looking at, particularly on the Heikin-Ashi candlesticks, typically looking at one or more of the time frames along with the trade instructions. You should find all that very helpful. If you'd like to get that every day at the close of the market, sometime around about then, all you have to do is become a Patreon supporter at any of the 3 levels. In addition, you get my new book. That is Three-Wave Trading Advantage. I love it. I think it's a great book. You guys have given me big kudos on it, and I do appreciate it, along with our 3-part series, Options Made Simple, the Charting Wealth Way. If you're interested in options, we're interested in teaching you about them. Okay, that's where we are on stocks. Let's go to bonds. Now, check out what we did. We had an interim low last week. We had a green spinning top this week, didn't quite get up to average. We had 3 candles, and again, the latest one finished drawing not enough energy to push it through the trend line on the 2-day chart, nor on the weekly chart. The half-day chart, it did push through at the end of the day, 0.63%. I keep telling you guys, this is my little pattern. I was hoping that we would get up to average volume, which would make it much easier to pull the trigger on an up trade. Now, I'll tell you that as far as us running the numbers, we are still down. We are still bearish on 20-year U.S. government bonds officially, but I do see the potential for a turnaround with the green spinning top this week. I would have been pulling the trigger much more likely if we had at least hit average volume, which we did not do. And if I would have saw a penetration on the 2-day chart through the weekly trend line, we did see it, like I said, at the end of the day. Well, we even saw it in the morning, but particularly at the end of the day when things pushed through, that would have caused me to really pull the trigger going long. But I think we'll see how the new week starts off, and if things do move in that direction. We're more than a coin toss down as far as our trade execution summary grid goes. Backtest accuracy is nothing to write home about. But again, I think it's going to go up. We'll see. Now, let's move on to gold. What is up with gold? Well, gold had been really, really strong on an up move, but it has weakened through the course of the day. You can see, well, the course starting on Wednesday going down, and it has penetrated the weekly trend line, at least on the half-day chart. Look at all that volume going down in gold in the morning. You also saw it going down on Thursday with a lot of volume. And again on Wednesday, decent above average volume in the morning as gold just pushed down. It has not penetrated as far as the candle goes. The wick has penetrated on the 2-day chart, not quite up to average volume, but gold has weakened significantly. You know, we did reach a, let's see, did we reach a higher high? We were at 317.60, 316.24, so no, we didn't, but tried to move up, decent volume, but we can see on the 2-day chart where things have cranked over, and of course, Wednesday, Thursday, and Friday, gold just pulling back strong. Again, we haven't had things rotate over. We've had sort of a sideways slide and a try to build. We'll see how we go into next week and just what gold does, and if it's going to catch some fire or if this is going to be what we'd call an interim high and we see some red forming and a penetration of the trend line. Not all that much of a trend line, my friends. It is not completely horizontal, but it's darn sure not getting vertical, is it? That's where we are on gold, weakening in that up move. Now, lastly, we will take a look at Bitcoin. Bitcoin is still up. It is tied for second place with the S&P 500. The number one for up move is the NASDAQ 100 today. But as we look at Bitcoin, it has pulled back 1.90%. You can see how throughout, over the course of the last many days, sliding sideways, staying above the weekly trend line, but penetrated it on Friday on the the half-day chart, really pushing through, particularly in the morning. And the 2-day chart, we now have a doji breaking the weekly trend line. Now, as far as the weekly chart goes, We are still above the trend line, but a small and weak candle after all that up move last week. What could that mean? Of course, some profit taking as things slid along sideways after things really boomed up the week beginning the 14th of July. And we'll see as we get into next week if indeed things start to catch a little more fire, push back up, or if they just break totally with the trend line and we start seeing, a consecutive down move with some strong pullbacks. Now, you remember a while back, I did a trade when we saw Bitcoin pulling back strongly. I jumped into BITI. I believe it was all the way back here, back in June of last year, where we had 4 weeks of BITI pushing up. And again, this is the ProShares inverse. It's the short of Bitcoin. And of course, look at what it sells at. Now, again, that's a decent, I've seen the spread much smaller than where it closed today. It's only $17. Well, let's see, it closed at $18.08 and you've got a 22-cent spread. That's a pretty big, that's quite a decent spread for that small, but it does range and change. Again, we're not jumping into that at this point, but I just wanted to tell you a little bit about it. Of course, we also have PSQ, which is the short for the NASDAQ 100, and we have SH, which is the short for the S&P 500, and then we have Tango Bravo Foxtrot, which is TBF. That is the short for 20-year U.S. government bonds. So that is where we are, folks, as we end the day. In fact, I'll put at the end of today's training, at the end of today's show, our training on inverse funds, how to make money when markets crash. I'll tell you a little bit more about that so you can, of course, prepare for the future, because what goes up does come down. Always love to hear from you, my friends. CW@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth.